Every successful home care agency has one thing in common: great caregivers. And great caregivers don't happen by accident. They're built through training, continuing education, certifications, and ongoing investments. So here's today's question: can those costs become a business tax write-off? The answer is, in many cases, yes. I'm an enrolled agent with over 14 years of experience helping business owners navigate taxes, accounting, and IRS rules. And today, let's look at how employee training, licensing, and certification costs are generally treated for tax purposes and how to document them the right way. If you've been following this tax write-off series, you've probably noticed something. Every tax write-off comes back to the same idea. It's not enough to simply spend money. You need to understand the rules, keep good records, and know how to support the write-off if you're ever asked. This topic is not different. Let's start with your employees. The IRS generally allows ordinary and necessary business expenses. That means training that help your employees perform their current jobs is generally deductible as a business expense. For home care agency owners, that might include caregiver orientation, CPR certification, first aid training, HIPAA training, infection control, dementia care training, EVV software training, annual continuing education, state required training, license renewals, background checks, TB testing, and other required certifications needed to provide care. These aren't just business expenses. They are investments in your caregivers, your clients, and ultimately your business. Now, let's talk about you, the business owner. The rules are a little different. Generally, education that helps you maintain or improve the skills you already use in your current business may qualify as a business tax write-off. For example, attending a home care compliance conference, renewing a required license, or taking continuing education related to running your existing agency. Those situations are very different from education that prepares you for an entirely new profession. For example, if you own a non-medical home care agency and decide to attend nursing school to become a registered nurse, the IRS generally views that education as qualifying you for a new trade or profession which follows a different set of tax rules. Here is a simple way to think about it. Training that helps you or your employees to do your current jobs better is generally very different from education that prepares someone for an entirely new career. So what does all of this mean for your home care agency? Before you record a training or licensing expense, here are 4 things I encourage business owners to consider. First, does the expense actually qualify as a business tax write-off? Second, what's the correct way to claim it? Pay the expense through your business, record it properly inside your accounting system, and make sure it's related to operating your agency. Third, what records support the write-off? Keep invoices, keep receipts, keep proof of payment, keep training certificates, and keep attendance records. And if the training was required by your state or by your agency, keep documentation showing that requirement. Remember, every dollar you spend in your business tells a story. Your accounting records should be able to tell the same story clearly. And finally, how does your business structure change the answer? The expense itself may still qualify, but where the deduction appears and how it's reported can depend on whether your business is taxed as a single member LLC, a partnership, an S corporation, or a C corporation. As you've seen throughout this series, entity type matters. Now let's talk about one common mistake. Many business owners pay for training personally, forget to reimburse themselves, or never record the transaction inside their accounting system. Months later, they're trying to remember what they paid, why they paid it, and who the training was for. That's why I encourage business owners to record these expenses when they happen, not months later during tax season. Good accounting always beats a good memory. So here's the big takeaway. Investing in your employees is often investing in your business. And when those training, licensing, and certification costs are ordinary, necessary, properly documented, and correctly recorded, they may qualify as valuable business tax write-offs. Over the past 14 videos, we've talked about vehicles, home offices, meals, retirement, hiring your children, startup costs, assets, charitable contributions, cell phones, health insurance, and now employee training. But I hope you've noticed something. This series was never really about finding more tax write-offs. It was about building better accounting habits. Because good tax returns aren't created during tax season. They're built throughout the year, one well-documented transaction at a time. Thank you for joining me throughout this tax write-off series. In our next series, we're going to build on everything you've learned here. We'll talk about how to pay yourself, how to pay your team, and how different business structures change the payroll and tax rules. Because understanding your tax write-offs is only part of the picture. Understanding how you pay yourself and your team is the next step toward building a stronger, more compliant, and more profitable home care agency. I'll see you in the next series.